Good afternoon, everybody. Welcome to one of the last Sundowner sessions for the FSC ReGenerations Reimagined Series 2021. My name is Leigh Bennett from Fidelity Life, and I'll be facilitating our panel discussion this afternoon, exploring claims and some of the complexities that come with it. Before we get started, I'd like to say a huge thank you to all of the sponsors that you can see on the screen who have made the ReGenerations conference possible thanks to their generous support. And in particular, AMS, who is the sponsor for this session. I'd also like to acknowledge all of the hard work by the FSC and the conference committee. Once again, you delivered a brilliant conference, having to change tack multiple times over the course of the last few months. So well done. Claims can be a really complex beast at times, particularly when there are multiple parties involved in the claim. Whether it's other insurers, ACC, reinsurers, or medical specialists, differences in approaches can have a big cumulative impact on the customer. To discuss this today, it's my pleasure to introduce our wonderful panel, all experts in their field and truly passionate about the customer experience. So I do want to do their backgrounds and their experience justice. So if it feels like I'm reading this next little part, it's because I am. So joining us from Sydney, we've got Matt Ralph, who is the Regional Chief Actuary for Gen Re in Australia and New Zealand. Having previously held a number of senior positions at AMP, he has significant experience in insurance pricing, underwriting policy, and reinsurance. Gen Re exclusively undertakes the New Zealand Disability Income Experience Study, which provides valuable insights into the performance of our industry, something which I'm really excited to hear more about in just a few minutes. Chris Aynsley has been an advisor for over 35 years, with customers ranging from the self-employed contractor to large corporates. He's well regarded as an innovator and as an industry leader with an unwavering core focus of protecting the financial security of his customers. Vicki Currie is a registered nurse who has worked in many areas of both the public and the private sector. Over the last 20 years, her primary focus has been working in insurance, both with ACC and with private insurers. Vicki completed her postgraduate qualifications in case management and her master's in managed care. Most recently, Vicki has been using her broad skill base as a clinical rehabilitation advisor to private insurers. And lastly, but certainly not least, we've got Salesh Narayan, who is a financial consultant at Fidelity Life, responsible for ensuring fair financial assessments. He's regularly involved in complex financial assessments and has a strong lens over the co-managed claims, especially those that don't fit the typical mould. He's a strong advocate for making numbers accessible and increasing financial literacy in the wider market. So before we dive into the panel discussion, just a reminder that you're welcome to put any questions you have into the Q&A function on the bottom of your screen. And I'll pick those up and I'll put those questions to our panellists. So as I mentioned before, Gen Re conducts the New Zealand Disability Income Experience Study, So Matt, I'd like to start with you and ask you to take us through some of the insights from the study, acknowledging the fact that it is hot off the press, so hot in fact that the panellists haven't heard any of the outtakes yet either. So Matt, over to you.
That's right. Very exciting. Yeah. Thanks, Leigh. And so first of all, thanks to the FSC for inviting me along and giving me this opportunity to share where we're up to and some of the insights that we're seeing from the study. I do feel like a bit of an interpeller. The main purpose of this session is obviously to talk about the complexities of managing claims. And I'm mostly going to talk about some hard numbers, but I actually think it's quite good to bring the two together. I think one of the mistakes we make as an industry is not often enough thinking about customer and financial sustainability at the same time. I think it's obviously very important that both sides of the coin are looked at, and often we look at one without the other. So maybe the data I'm about to provide will give you a bit of context for the rest of the conversation. So the study that we performed, so Gen Re's been doing this for a number of years. In fact, much longer than I've been at Gen Re. I've been here for only 1 year. We do it as part of our commitment to the industry, and we're obviously delighted to be working on the study. We received data from most of the New Zealand insurers, all the large insurers, and it covers the period of 2013 to 2019. And so we've been looking at the incidence of claims over that period and the rate of getting claimants back to work over the same period. So claim incidents and terminations, as we call them, over that 2013 to 2019 period. In terms of the timing of the study, so we've obviously had lots of requests as to how we're going. It has been running for quite a long time, and people want to know when the results are going to be ready. So just to give a bit of context, we've been working with the insurers to get the data submissions into shape for a bit over 12 months. So it's been a long process, something we'd like to sort of think about how we might do differently going forwards as an industry. And from Genera's perspective, clearly 12 months is a long time and means that the study is already a little bit out of date by the time we release the report. So definitely something to look at there. But we have got the data to the point where we're able to run the study and to get some results. And that's the basis of what I'll talk about today. But as Leigh's mentioned, it is hot off the press. Literally myself been looking at the results over the last 48 hours. But I am comfortable that we've got some important and high-level insights that we can share and that I think will be interesting to you all. Just in terms of next steps, we're in mid-January, we'll be approaching each of the insurers to share the results for their own books. And I think we just really want to validate those results at a individual company level before we bring it all together and release it to the industry. And we'll also ask for your input at that point in terms of whether there are any questions you might like us to try and answer as we finalise the study, any insights that you'd be interested in. There'll probably be some rework at that point, but we're looking to hopefully have the report out to the industry by April. But that will really depend on the individual insurers prioritising the support that we'll need to just validate their own results. Obviously, that's key. We don't want to release results unless the companies are happy with them. So I would just ask that those people here from those insurers help us to prioritise that work. So anyway, with all that said and done, what are we seeing at this point? So I did touch on some of this at a previous conference earlier this year, but I think we're quite a bit further along now. So the first thing I want to talk about is claim incidence overall. So over that period, 2013 to 19, we're seeing quite a steady increase in claims frequency, and that's mostly driven by accident claims. So accident claims, and we'll talk about ACC and whether that's, the interaction there is somehow related to this, but we are seeing quite a steady, significant increase in accident claims over the period. Sickness claims, there perhaps is an upward trend as well, but it's certainly not to the same extent as accident and arguably could be me seeing something that's not there. The pattern of claim increases for accident claims and overall is different by different insurers. So I do acknowledge that this is not something that's affecting all insurers, but at the same time, it's not any one company that's causing this. So sometimes you hear comments to, it's company X causing or it's company Y causing it. That's not what's going on. This is across many of the companies. I would definitely describe it as an industry trend rather than an individual company contributing to that. The next thing I want to call out is very significant. And I think it really the FSC and the members, you're really going to have to think about this and what your response is to it. Is that is by far the largest increases are confined to the agreed value policies. So indemnity policies not seeing the same, if anything, not seeing an increase at all on indemnity policies. It really is confined to agreed value. Those, obviously, I'm in Australia. You'll know that in Australia we had a similar issue, and the outcome of that, because the industry didn't act, the outcome of that was that agreed value policies were banned by a regulator. I would, that's not something you want to happen in New Zealand. And my advice would be to really sort of seize the opportunity to think about what's going on there and whether there's any other opportunities to fix that before it gets out of hand. So you really are seeing quite a significant increase in accident claims on agreed value policies. The increases are focused on younger policy holders. So it's really at the younger ages that we're seeing the largest increases, and on newer policies, so shorter, more recently written policies. So it's not an underwriting, it's not underwriting unwinding or anything like that. It really is younger people and newer policies. Apart from that, it's across all benefit periods. It's both males and females, smokers and non-smokers, and really some variation between occupation classes, but certainly increases occurring across all occupation classes. So that's the news overall. And as I say, the focus really there is on those accident claims. They really are driving this on agreed value policies as well. Just to talk about sickness claims briefly, as I said, overall sickness claims are possibly not up at all over the period of the study, certainly not to the extent that accident claims are. Some increases for blue-collar occupations, perhaps, and offset by a reduction for white-collar. And where there are increases, those increases are focused on younger policyholders with shorter duration policies. We have had a look at the cause of claim. So we have a standard set of claim causes that is borrowed from the Australian table that is produced. So that it breaks things into about 6 or 7 categories of claim cause. And so we have had a look at that. We don't have the claim cause for all of the claims in the study. So that's one thing I'd call out in relation to the data, is that in some cases, we don't always know the cause of claim, and that can make some of this analysis quite hard, especially when you think the New Zealand market's not the largest market in the world. So claim volumes can, once you get down to this individual cause of claim, they can be quite small claim volumes. So seeing the patterns can be a little bit harder. But what we can see is that the highest increase in claims for the sickness, amongst the sickness claims, the highest increases are for mental health and for cancer. So perhaps mental health, not much of a surprise, but just highlighting that mental health is certainly emerging as a higher growth area of claims, but also cancer as well. Some of that data definitely needs to be validated. We've done some work with terminations as well. Now, here we've got more to do, I think, with some of the companies in terms of their data still. So it is a bit more limited, and I have to put a few more caveats on it. What I'm seeing at this point is that for accident claims, despite the higher number of claims, there seems to be no improvement at this point in terms of claim terminations and claim durations. Sometimes when you see increases in claim numbers, that's accompanied by shorter duration of claims because the new claims are more minor claims. That's not been observed so far over that period. So that's one thing to note. And for sickness claims, there does seem to be some deterioration. So for and I haven't been able to split that out by cause of claim, not enough data, but there does seem to be overall for sickness claims, some deterioration and lengthening of claims. And that was true for most companies in the analysis. The extent varies between companies, but certainly there for most of them. And it's both genders, and there's no particular other pattern to it that I could see. So that was probably the insights that I wanted to share. And we'll get into the conversation now, but some food for thought there, hopefully, for the rest of the conversation. So thanks for that, and look forward to the rest of the session.
Chris, is there anything that kind of jumps out to you from those findings? Is there anything that is particularly, well, not shocking, but is there anything that you didn't expect, or is this a pattern that you have been consistently seeing with customers face to face in the last couple of years?
Good question, Leigh. Mental health, I think, is always a great concern for all customers. And we've talked a lot about this recently, but mental health is widely regarded as probably the number one cause for claim amongst people in professional services. And of course, musculoskeletal injuries are another significant tranche of claims. The thing I find most about mental health is that surprising is that when people do make a claim, they are absolutely flabbergasted that they were a candidate. That they didn't believe that they would ever be making a claim against the policy for mental health, and it's when we quietly remind people that if they thought that they were ever going to make a claim against something, the policy was never going to be issued. That life insurance or insurance is for unexpected claims, and so a swell in mental health claims. It's not surprising at the moment. I see, reading some data recently in The Economist magazine, that we're looking at a generation again of married couples without children back to the 1920s volumes, because the perception from younger people these days is that having children is very onerous, having an occupation is onerous. You know, living life in these bigger cities is complicated. Purchasing a house is complicated. Saving money for, financial outcomes is complicated. And so life is complicated these days. And I think it stands true that there's a swell in people's mental, deterioration in people's mental well-being, and hence a shift up in mental health claims. One thing, though, struck me there, Matt, was that you said that there'd been a surge in cancer. Do you think any of that's linked to lack of screening during lockdowns, or is your data set too new? We could talk about that. So
the data is too old for that to be the cause. So it's only up to 2019. That said, I did attend a similar presentation for the Australian industry recently, and they had some quite shocking stats in that presentation, and I suspect it may carry across to New Zealand as well, of the reduction in the number of mammograms that were carried out in 2020, and the reduction in the number of IP and TPD claims for cancer during 2020 and into the beginning of 2021. So I think, if anything, in the short term, you'll probably see a reduction in cancer claims, but I wouldn't read that as good news. I suspect that will happen, but it will be linked to, unfortunately, less diagnoses that will ultimately come back later on as much more severe and less easy to treat conditions. So I suspect you may have some of that issue also in New Zealand.
So, Vicki, from your perspective, and talking about the diagnosis or the absence of diagnosis through a COVID situation, we talked a little while ago about the importance of a correct prognosis and the early triaging of claims, and the ability to be able to get people back to work. Can you just talk a little bit from your experience in terms of the importance of early triaging and what that actually means in practical application?
Right. Thanks for that, Leigh. Sorry you can't see me, everybody. Technology at its best, but it's probably best given my age. But look, thanks for asking me on the panel today. From a clinical perspective, early intervention in any health problem is always the best way to go. So that holds true whether you're working in a hospital or whether you're working for an insurer. So certainly that triaging first up and front up is really important. And I think one of the things we all discussed about recently was the wait periods. And so we tend to get people sometimes on 13-week wait who haven't had perhaps what we call in the health business best practice recommendations. And so you're on the back foot a bit. What we do know from research is that the longer you stay off work, no matter what your condition is, you could have a sore toe or you could have a mental health problem. It doesn't actually matter the diagnosis. The longer you are removed from your normal life and work activities, the less likely you are to ever get back to them. That's what we know. And by the time you've reached a year off work, your prognosis for ever returning to any job is 0. So the clock starts ticking the minute you get sick, basically. So one of the sort of shout outs today would be that, and I'm sure all the insurers do it now, is to get people, to enable people to say, look, if you're feeling unwell, give us a call. I know your wait period is 13 weeks, but most insurers will assist with that. We'll start helping you going forward. So that's an incredibly important message from that health perspective. Yeah, so I'm interested in what Matt said about just going off track a bit, but while I think of it, Matt, when you were talking about the musculoskeletal, the higher claims, I'm just interested, given we've got an ageing population, and we know that when you have a physical injury as you get older, it is harder to, get back to that. Was there any significant rise in claims in age group around those injuries?
There wasn't. that's not to say that they don't already have a very significant number of claims of that in that age group. But the upward drift in claims was certainly not being driven by older people or musculoskeletal. It was much more tied back to both accident, but also then those cancer and mental health claims. But that doesn't mean that there's not a huge amount of value in managing musculoskeletal claims well. They make up a large proportion, and if they go bad, they can obviously last a long time. So.
And just sort of moving on from that, Leigh, asking about triages, one of the complexities we have, I mean, ACC is a fantastic system, and I'd be the first one, to admit that. But one of the challenges we have is that people forget that they're two very different policies. One is any occupation and the other is own occupation. So the clock is ticking again for the private insurers as soon as the person comes on claim, because the way that ACC works is that they will do their drop-down scenario of getting the person back to their own job, but they're not as driven as we are in the private insurance world to see that this is the triage up front, can this person ever go back? Because the policy is quite clear that if they can't go back, they can generally, the policies are, they can be offered retraining, or that's not possible, or they don't want to enter into that. We're in a situation where you've basically got a total and permanent disablement. So I think that it's really important to see that difference, because a lot of the time we don't in the private insurance. So for me, as soon as someone comes on with an injury, particularly a serious traumatic injury, it's very important to start getting them the best help they can. And I'm not saying ACC aren't wanting to get them the best help, but they have a very different legislative process where they will also be looking at, yes, this person has cover, but are they now depressed because of the injury, or are they depressed because their wife has left? So actually, do they have cover because the injury is now okay and they can get back to work? And that's where sometimes it can be very problematic for the insurer, because if we are not engaged in that process, it means that those people now potentially are sitting there and we've not been assisting them. So it's a bit of it's a hard call to know when to get in there. Sometimes we've taken the premise that we get in there as quickly as we can, but we've also got to be very careful that we're not doubling up and causing the customer, more stress with all of us in there. So that's a real key thing. And just listening again to what Matt said, if those are increasing, I think that's, the insurers have to be really mindful that they have to have a way to manage that and manage that fairly quickly, because ACC will have their prescriptive process. For instance, we've got vocational retraining in the benefits, and we can be quite, think outside the square in that sense, which is fantastic. I love that about the private insurance. But for ACC, there's a very prescriptive process. So that might take a lot longer before they're advising funding, etc. So, yeah, another challenge. As I say, not a criticism, just a challenge around the two different policies.
You make a good point there, Vicki, about, there being a tail associated with ACC claims, and that it can grossly affect any disability income, agreed value indemnity type claims, or even TPD, because the claims management's looking at ACC to get someone back to any occupation, whereas we, of course, are indemnifying people for own occupation. This is where waiver of premium is a fabulous benefit, is that even though the ACC claim may be fully offsetting any income protection claim, so that the claim liability for the insurer is zero, the claim liability is not zero where there's waiver. That the insurer will, of course, pick up the waiver of premium claim concurrently with ACC, and that gives the insurer the opportunity to get involved with perhaps some claims rehabilitation, or get across the file, making sure that the individual doesn't turn into a full-blown any occupation claim or own occupation claim, and that that they can assist in other ways with their own rehabilitation to perhaps make sure that when ACC thinks the person's ready to go back to work, they're actually ready to go back to their own occupation as opposed to any. And we see this lots, where someone is fit for work for ACC's classification of disability, and completely unfit for work in terms of their own occupation, which is a big issue. I don't know. Do you see much of that, Salesh, when you're doing your financial underwriting at time of claim?
Yeah, definitely. We do see that quite a bit. And it's all also, I guess, goes down to the policy wordings as well. As of late, I guess the new policy wordings, they've got that one income producing duty clause in there. And so that usually, even though the person can go and work, as long as they cannot do one important income producing duty, they are still classed as being totally disabled. And in some cases, and I understand that a lot of the insurers we have here, they do have the 10-hour clause as well, where the person can work up to 10 hours per week and still be classed as totally disabled. So definitely, while ACC is, I guess, there, as Vicki mentioned, their wordings are totally different, and it's any OC. So as long as the person can go and do anything, ACC treats us differently, whereas for us, we definitely have to work within the policy contract and ensure that they are fit to return to their own OC.
So you mentioned something a little bit earlier, Matt, around offsets and kind of the importance of fully understanding the kind of contracts that are in play, both with ACC and with private insurance. So, Salesh, I am going to come just back to you and just ask you to kind of walk through some of the complexities that we sort of find ourselves in, or customers find themselves in, when we are looking at offsets in terms of both other providers, ACC, and their own particular individual policy as well. What are some of the things that you see as being the complex components of that?
I guess when it comes down to ACC, Leo, one of the important things to understand is, and if you talk about someone who's an employee and they've got the standard ACC cover, ACC generally replaces 80% of their income. And if you then have a look at someone's indemnity cover, the most common indemnity cover there replaces 75% of the income. So just off the bat there, in most cases, the indemnity cover could be fully offset by ACC as well. Then when we, I guess, go into co-managed claims, one of the biggest, concerns there is different insurers have got different processes, right? So the policy wordings would generally say that we would offset any other insurance benefits that they receive. So if a person has a cover with two insurers, then based on the contract, one insurer can definitely offset the other. But the question then comes back to what the insured has paid premiums for both the insurer. So are they really seeking benefits? Is there really a benefit to that? And that's where all the different processes, which is not unfortunately in the policy wordings, it comes into practice really around co-sharing that risk. And I think that's really the right thing to do, so that the insured who has paid premiums to both the insurer definitely sees value. And that's where it goes down to, again, the different ways of calculating benefits. How do we share not just the previous income, but also how do we share all the offsets like ACC as well? And that's where all the insurers, I believe, who are involved in a claim definitely need to work hand in hand to ensure that whatever we do at the end is the best outcome for the customer from a financial point of view as well. There's a sort of a sentiment or a understanding in the industry that the person who issues the policy first, should pay out, and the person who issues the policy second should offset. Now, from a value point of view, I don't believe that's the right thing to do, and also from a customer's point of view as well. The right thing to do in that case is, given that both the policies have been issued and they would have most likely gone through underwriting as well, is that we definitely come to an agreement, both the insurers, where we can definitely share. And we work together. Now, not all insurance companies, have a financial team who assist in claims calculations or claims assessment, and same with the underwriting as well. So that's where we definitely need to work, and the one who probably has that functionality in their team could probably lead that discussion as well. And then I guess it's not also the insurer, it also comes down to the reinsurer as well, because sometimes even though the insurer has the great intention of sharing claims, sometimes the reinsurers don't agree. So that's another concern, because again, it all comes down to everyone's different practices. And as we all know, most of our reinsurers are based out of Australia. So things that happen in their market also has some sort of way of creeping into our market as well, even though we are two totally different markets in the way we operate as well. So it's all around, I guess, navigating through all of this. And that can become quite complex, but the main thing that we all just need to hold on to is that we are all trying to do the right thing by the customer, and to ensure that the person who has paid the premiums, the customer, is not the one losing out at the end.
Nice. And so you mentioned around a standard employee having their income replaced at 80%. And Chris, from a conversation that we all had as a panel the other day, I know that there were quite strong views from you around the ability to make adjustments for ACC in terms of Cover Plus and Cover Plus Extra.
Oh, yeah.
What are your thoughts around that and the advice process?
Oh, I don't know. Not the right answer. Yeah, hey, look, I get it. I see the commercial application of people dialing down their ACC, to the statutory minimum, which, hey, I don't do, so I can't really quote the numbers, but I think it's about $30,000 a year or $600 a week a person can get as a minimum compensation claim. And I'm sure a lot of people on this call know how this works, but when a person dials down their statutory compensation from ACC to the minimum, they're essentially raising the liability to the income protection insurer for whatever their policy benefit is, or if it's indemnity, whatever their loss of income is. This, of course, means that the insurers end up carrying greater liability for an income protection claim had the person otherwise have had their full, their full entitlement under the ACC. Some years ago, I recall an application for insurance I was completing on a yellow proposal. Funny, I just remember the colour. It was either Sun Alliance or Tower back in the 90s, where it made a comment along the lines of, if you don't take your, or if you dial down your income protection your ACC to the minimum, we'll presume you haven't, and we'll offset whatever you were entitled to. Which I thought was quite an aggressive response, but Matt can probably talk a bit to this. But the New Zealand premium base assumes that there's a no fault compensation system running as ACC, and so the premiums are rated on I guess that claims experience. And when people are dialing down their ACC to statutory minimum and then passing that liability over to the insurer, that causes disruption in the pool, which isn't good for the customer as a whole, or the pool as a whole. And then also, the thing that really concerns me the most about this, and because I guess it's all about me, is I don't want to get sued. ACC, as much as we can slate them, and people do, and it's a big pastime for people to have a good old crack at the Crown insurer, at the end of the day, they are just the mightiest group scheme in the country. They're pretty good with pre-existing conditions. They're not very big on assessing you on your pastimes, such as your mountaineering or whether or not you're an All Black. So they're actually really good at providing cover for people who do dangerous things. Now, we in the private insurance world will never cover people, who do base jumping or jet boat racing or motor racing or play our national sport. So this ACC thing is this great group scheme, and so by dialing people out of ACC on this whole save some money on your levies so you can spend it with the private insurer is short-sighted and I think fraught with danger. I know it has a good economical impact for some people who are trying to perhaps save money on their ACC levies so they can buy some good illness cover or other forms of cover like trauma, TPD or life insurance. But I think it's something that we will start seeing litigation on. I think it's like I said, fraught with danger, and it does greatly concern me. The other thing too, while I'm clearing my throat, on this very point, is this conundrum we see whereby you can not have a mortgage, but you can buy mortgage protection insurance based on a formula against your income. Some insurers are 40% or 45% of your income. You can issue a mortgage protection insurance tax-free paid policy with no offsets, and in situations that raises sort of this over-insurance flag, which of course makes people like Matt lie awake at night sweating at the thought that someone can go off work, receive 40% of their income tax paid, plus an ACC top-up, which causes, of course, a wonderful opportunity for people to anti-select against the insurers. And gosh, you said that there'd been in your opening pitch, Matt. You said that there'd been a rise in accident claims.
Yeah.
And I think a lot of that's probably to do with the fact that everyone likes to break collarbones on mountain bikes. But are you seeing much of this whereby your private insurers is picking up claims because people have having a double dip there with mortgage protection insurance and ACC at the same time? Does it worry you?
It worries me. In terms of the study itself, we don't have the data to be able to know that. But I know through other things that I've seen that certainly there is some difference in the performance of mortgage versus regular IP, and it certainly seems to me to be down to that difference in sort of net position that the customers find themselves in. I think there's a general issue that it's the right thing for an advisor to help the customer optimize their own position. But to your point, Chris, is if enough people start to do that and start to take certain actions that seem to be the right thing from their own perspective, it just impacts on the pool, and it makes the pool more unsustainable over the long term. So as an industry, I think it's important to identify those areas where the opportunities are presented to customers to do things in their own interests that aren't in the interests of the pool, and to come up with approaches that are more equitable there, because ultimately it's the people who don't dial down will be the ones that pay higher premiums.
Yeah. Yeah, the thing, it seems to sit, pretty squarely in one sort of cohort in the New Zealand market, which is pretty much your youngish. What I mean by that is probably sub 40 tradie, self-employed tradie, who, if you're a builder, and you're earning, I don't know, $110,000 a year, your ACC levy might be $5,000, to fork out that 80 grand's worth of income protection. 80 grand's worth of ACC, and now if you dial it right down, you might get yourself down to 2.5 or 2 grand. So there's quite a large incentive. So I mean, if you looked at the pool from that anti-selection, the manipulation, you'll probably find it is younger class 3 tradie, self-employed, and that I think is where if every insurer dived under the hood and had a wee look, they'd find that's where they're paying a disproportionately large amount of accident claims for something that they would never have predicted.
The other thing, I'm just going back to something you said, Salesh, and I take the point that as a employee of an Australian-based general reinsurer, we're not necessarily, we need to be careful about drawing parallels between the market. About 2/3 of my business is Australia, about 1/3 is New Zealand. So I see a fair bit of New Zealand business, but you're right that I see more of what's going on in Australia. And they are different systems. The ACC is a unique New Zealand system. The cultures are different, and there are lots of reasons why the experiences are different, and the premiums are lower in New Zealand, and so there's a lot of differences there. But at the same time, you can always learn lessons from other markets, and the closer those markets are, and the more similar those markets are, the more the lessons. And I think there are some lessons that you definitely want to try and learn in New Zealand. Do not. I've said this before, but there are mistakes that were made in Australia, and I would I would definitely encourage the industry to take the ball by the horns, and if they see signs of, at least start monitoring sustainability issues at the same time as you're worrying about customer outcomes, which is obviously critical. But do monitor those sustainability issues, and soon, if you see signs that they're emerging, really sort of come together and find ways to manage them as an industry before somebody else comes up with some ideas that you might not like.
Yes, no, definitely, Matt, and I guess that comes back down to having sustainable products, and going back to Chris's note early on around being able to insure your income tax-free on a mortgage protection benefit. When you think about it, it's a mortgage protection benefit. It should just be for someone to be able to cover their mortgage payments. But the products have definitely morphed, and I think that's probably somewhere where our local industry might be heading as well, in terms of really looking at sustainable products. But I just want to pick one thing there, Chris, that you mentioned around dialing back down ACC, to save premiums. And I think that's only going to work if the insured is adequately insured. Right, so if they're underinsured and those sort of things, then that's definitely a lose-lose scenarios, especially if the IP cover has ACC offset. So they're getting the minimum amount from ACC, and then it's getting offset. They're underinsured. So I think that's where the reviews, the yearly reviews, will definitely play a big part.
Oh, you're completely right. I mean, and people's incomes fluctuate a lot, and that's where you really can't go past having agreed value insurance policies. And making sure that we keep up to date. The income protection insurance is a complicated beast at best of times, and all we've ever seen really is premium increases over the years. I see insurers announcing yesterday some interesting premium increases that are coming out in the early new year because their claims experience has been somewhat surprising, and there's some quite interesting media around that very point. But ACC does provide a fabulous, service, to their customers in terms of, the hospital, the rehabilitation, the transportation services, death benefits, which, as all dialed down when people dialed down their ACC, and of course the compensation. I mean, admittedly, it's capped at about $100,000 a year, so higher income earners certainly benefit from it. But why anyone would want to be in a low risk professional services occupation or a class 2 risk administrative duties and dialing down an ACC benefit absolutely floors me, because the premium is so low, but the advantages of the policy of ACC are so significant that partnering with income protection insurance is perfectly logical for higher incomes and enjoying the offsets. But the key here, like Vicki pointed out right at the beginning, is, and you've talked also, Salesh, is making sure that the advisor is across, the claim if it's ACC, so as that the waiver of premium, or that there's an introduction to, the insurer to at least look at triaging a claim that may not even be their liability to start. And that's where, we encourage our clients always to keep us abreast of any injury or any accident, so as that, we can update them. This is where some insurers, and 3 or 4 of them now, have that specified injuries benefit, which is really handy if you're a mountain biker, because there's automatic payments. In fact, we've had about 4 collarbones, summer months in Port Hills here in Christchurch. People are getting up there and breaking their collarbones. And so we find that often we will get a tip off for an ACC claim on the basis of a specified injuries benefit on an income protection policy. And some insurers, of course, have, not even linked to an income protection policy, an accident benefit, which can trigger immediate payments. And this is a good way of keeping in touch with your clients, because if they know that there's an accident, they can reach out and talk to you. Then it gives us an opportunity to intervene and maybe, double check whether or not the ACC approach for rehabilitation on any occupation is best for that client, and or whether or not their private insurer needs to intervene. Any opportunity to talk to a client, I think we'll all agree, is a good one. because that is ensuring, I guess, good customer outcomes. Yeah.
I am just going to interrupt and ask a quick question from Troy. So thank you, Troy, for putting your question out there. And as a newbie to this area, Troy has asked, is the customer's primary duty to optimise any ACC cover and reduce the insurer's liability, or is it the inverse, that it's the primary duty to the state not to optimise ACC claims where the customer has private cover in place? And I know this one is probably a little bit subjective, and Chris, I'm going to throw this one to you from an advice perspective. But what do you kind of see as being a quick summation of that answer?
Oh, I thought you said there was going to be no bus throwing. It's a hard one, eh? I mean, what's my duty? My duty is to, see that my customer has the best customer outcome. But, what my duty is also to ensure that, I guess, our industry is sustainable for forever. It's like planting trees in the forest, isn't it? In some situations, it's a fabulous outcome, but it's, again, fraught with danger because of maybe issues of non-disclosures or the opportunity for an insurer to have an exclusion, for the twisted knee that was otherwise insured. I don't know, you could have a bob each way there. What's the right outcome? I mean, I guess the right outcome is the best outcome for the customer, and if the best outcome for the customer is coming away from an accident with, the equivalent of 150% of your pre-disability earnings, well, that's a high five moment. Everyone's happy, but, we can't sustain that. The market can't sustain that at all.
Almost everyone. I think Matt was going to say a firm no on that one.
Yeah. But that's
I'm not happy.
Yeah. But that's the exact truth of the situation, Matt.
Yeah, no, I know. Yeah.
You got 40% tax paid and 80% from the ACC. It's not hard to do the maths, eh?
Yeah.
But good customer outcome.
Yes.
Definitely. Hey, I am just conscious of time, that we do only have 13 minutes left. So what I'm going to do is do a quick little round robin wrap up, and I'm just going to put one more question to each of you panelists. And my question is, if there was one thing that we could do as an industry that would improve the claims experience or process for customers, what would that one thing be? And Salesh, I'm going to throw this one to you first.
Wow. I think the key thing, we can go into all the details and everything and pick it all apart. But the main thing is to ensure that the customer actually understands their policy that they have and the product. The thing that we see all the time is, the customers, when they claim, and if there's an offset, they are not aware that there's going to be an offset. And one of the things that I'm just going to throw in there is, it's also, going back to the co-sharing and co-managing claims. It's not just, just the normal retail policies, but it also works with the group covers that sometimes some employers have for their employees as well, right? So that only comes in at claim time. Sometimes employees aren't aware that they've got a group cover that the employer has paid for until they go and claim, right? So then that also has an impact on how much they get paid out from their retail cover. So I guess coming back, it's a really key for the customers and us as an industry to be able to educate the customers in terms of what the products contain, what they cover, and the best way to do that is to have simpler products.
Nice one. Vicki, I'm going to come to you next on that one. Just had to find my mute button or unmute button.
Thanks, Leigh. Look, I'll just follow on for Salesh. Sounds like we're singing off the same hymn sheet, but the reality is when people make a claim, they're unwell. And a lot of them, we have to ask a lot of things of them immediately. If there was some pre-positioning around that, I would be more than delighted, and I'm sure all the customers would too. It's a difficult one because you buy insurance to me thinking you'll never use it a lot of the time, obviously. and your policy might be so old that you don't know, but I don't know because I'm not an advisor. I don't know how the advisors work in terms of reminding their people or whatever. I don't know. But what I can say is it creates a lot of stress for them, because when we start to tell them what we'll require and talk to them about their policy when they are sick, I mean, can you imagine if I come to your bedside and say, oh, look, I'd just like you to sign all these papers for your mortgage, and, you know, you're sort of dying on the bed. So I think that I agree with Salesh, is that I'm not saying people should absolutely know absolutely everything, but they should know that this is an income protection policy, for instance, that will protect you as long as you cannot do your job. So it's not just as simple to say, Vicki Currie has a medical problem, she's depressed. It's to say, how does that affect you doing your role? That's the key thing with income protection. And I think a lot of the time that gets lost in the mist. You know, it's just, oh, here's all the medical detail. You know, for instance, if I break my leg, I can theoretically still put my leg up and come to work. So, I mean, that's a simplistic view, but this to me is so important. We can then talk through and talk to them about specialists and what's happening, what's best practice rehabilitation, and that's what people do in the health world every day. But one thing that is challenging is that understanding the product when they come on. And we try to, and I certainly say this, is that that's an important conversation to have straight up. Rather than saying, oh, we'll just need A, B, C, and D, and we're just going to get X. And then, of course, you come back and you have more things you have to get. And this is when the sort of suspicion creeps in, that you're trying to perhaps not accept their claim or whatever. So I think that that's so important, the key thing, because I say all the rest we can do once we've got them trusting us on board and helping them, and that's good customer experience and good from a health outcome point of view. But I think that is a real key thing, is that a lot of them have no idea when they come on claim. As I say, please, it's not throwing anyone under the bus, or it's just the reality is that may not be solvable. But if it was, that would make their experience far better, and it certainly would make, I mean, we all know that claims lengthen out not just because of the condition. It will often be lack of trust issues, because people will be upset, they don't want to go back into work, and they feel that you're pushing them or whatever because they've never trusted you from the beginning. So trust is key, and you've got to develop that.
Yeah, couldn't agree more. Matt, over to you.
Probably just to respond on a couple of the points being made. I completely agree with the notion that we need to simplify product designs and policy structures in order for customers to understand what they've got. But I would just say, please don't think that the answer to that is therefore to have policy constructs that give people 150% income after claim. That's just sustainability is back to the point I made at the start. You've got to look at sustainability alongside the customer outcomes. And if you build a system that's not going to be sustainable, a system that pays out more for injured people than for people who aren't injured is not going to be sustainable for long. You really are going to be building trouble for the future. You should manage that now rather than waiting for it to emerge. To that point, I think the one thing that I would ask for, and you won't be any surprise, is in order to measure this sustainability and to keep track of where things are up to, and to try and get information back to the industry about how it's performing. I would really love for the insurers to have more of a focus on their data, and more of a focus on maybe looking at an industry standard for data. For the DI claims and for the wider industry, and so that when on a regular basis you can get consistent feedback that isn't sort of clouded by messiness around different companies doing things in different ways, for prompt insights that really give you an understanding where things are going, and if any problems are emerging in terms of sustainability, financial outcomes, that they are understood early, and so that they can be managed at the same time as you're managing customer outcomes.
Nice. And lucky last, Chris, final thoughts from you?
Yeah. I mean, we've talked a lot about income protection, but it's more to it than that, isn't there? There's life and trauma and even medical insurance. You know, the one thing I find I do the most when I'm with claims, and I seem to spend a lot of time on them these days, is actually just dealing with pessimism, fear, skepticism, stress, anxiety, sort of related issues around clients and their claimants. So the pessimistic bias goes through the roof, the optimistic bias disappears, and so I see my primary role as sort of, assistant claimant, helping them navigate the path of, paper, policy interpretations, telling them that the insurer is, got a job to do here. There's a reinsurer involved. We only pay legitimate claims. This isn't personal. They're not picking on you. There's no, there's no one doubting you. We've just got boxes to tick. So I think, if there's anything that the insurers could do in terms of managing a claim is get personal with the clients, involve the advisor immediately. Always say, look, this is your customer. We're retaining you on your renewals or your trial schedules to work with your customer. Please help us here. Let's work together. Hold their hands. You know these people. You know why they bought this insurance. You know what it's for. You know their families. You know their wife's name or their husband's name. You know their names of their kids. You know where they go to school. So involve the advisor and help us all walk this path together, because it's scary for people alone, and it's they're very vulnerable. Every client we have make a claim goes in our vulnerable clients register, so it's that we just acknowledge simply that they're vulnerable, and that's really where I sit on the space.
Yeah, and I think, Chris, you've made a really good point in wrapping up, and the fact that we are all in this together. We all form, we're all a different puzzle piece, part of a bigger, wider puzzle. And, everything that we do in our day jobs is actually geared towards a really great outcome for customers come claim time, because that's why we're in the industry, right? That's why we do what we do.
You got it.
So, look, hey, it is 4 minutes. We've got 4 minutes left. So I am just going to pass over to Richard Taylor from AMS as the sponsor for this session to give us a quick wrap-up. Richard.
Hi, thank you, Leigh. Thank you, Leigh, Salesh, Chris, Matt and Vicki for a really insightful session on claims and some of the challenges around claims and the specifically the New Zealand market. I think the average consumer makes an assumption that ACC is there for accident insurance and that's it. When people get into the look a wee bit deeper in terms of the protection that provides, and certainly those people that go through a claims experience, they then begin to understand perhaps there's a much bigger part for the private insurance sector to support around ACC and income protection. And it's really interesting to hear the news in this session and an earlier session today talking about the whole claims experience. After all, the consumer is buying insurance to be able to protect themselves against the things that people would claim against. So yeah, really cool session. I'd also like to thank FSC as well for this excellent event over the last couple of days and the previous sessions as well. A delivery of this kind of event in these interesting locked down and very much online times is obviously a challenge, and I think they've done a great job. My other kind of takeaway from this session as well is I guess a concerning one. It has been a theme throughout this last 2 days and in the previous FSC sessions, and it's a theme across many conferences at the moment, which is talking about the challenges of mental health. I think it's a very challenging time. Obviously, Matt's data is showing prior to COVID that mental health had seen a real increase in terms of claim areas. There's been a lot of conversation about mental health and COVID, a lot of professional people working from home, a lot of isolation, a lot of kind of lockdown anxiety, and obviously it's really concerning to the industry and to the country that these things are going to increase and accelerate over time. So challenging times. In terms of just a quick word on AMS, in terms of what is AMS, AMS is a leading provider of end-to-end policy management solutions in New Zealand, and probably a name you've never heard of, but yeah, quite big insurance. Thank you very much. Thanks, Leigh.
Brilliant. Thank you, Richard. And again, just want to echo Richard's sentiments and a huge thank you to our panellists, so to Salesh, Chris, Vicki and Matt. Really appreciate you taking the time out to share your thoughts with us. Very informative indeed. So that wraps up the Sundowner session for this afternoon. Don't forget to join us for the final conference session next Tuesday the 14th at 3:30 for the FSC research launch for women and financial wellbeing in New Zealand. So that's us, right on time. Have a great afternoon, everybody. Thanks very much.